Hey everyone, welcome back to Corporate Decoder, the place where we find the real story behind corporate filings. And tonight we're going to decode the latest filing from Innovative Eyewear Inc., a company that's trying to put a tech twist on your glasses. Let's just say they're aiming to make your eyewear a lot smarter, and we're going to see if their business is just as sharp as their products. This document is for a company called Innovative Eyewear Inc. and it's basically a plan to let people sell a lot of their stock. It's dated July 18, 2025, and it's all about letting existing shareholders offer up their shares for sale. We're talking about over 2 million shares here. So what exactly is being sold? It's up to 2,345 shares of the company's common stock. A big chunk of these shares are tied to something called warrants. Think of warrants like a coupon that gives you the right to buy a company's stock at a set price. In this case, these warrants were issued recently in June of 2025. Some allow buying stock at 2.6 and others at 3.25. The important thing is the company isn't getting money from these sales right now. That money would come if these warrants are actually used to buy stock. The important thing is the company isn't getting money from these sales right now. That money would come if these warrants are actually used to buy stock. The company's stock is already traded on the Nasdaq under the ticker symbol LUSEVOL, died all bellow. On July 15, 2025, the stock closed at $2.06, which gives us a benchmark of what the market thought of its value just a few days before this filing. This filing is essentially a roadmap for how these selling shareholders can get their shares into the hands of new investors. They can sell them directly or through brokers, and the prices can vary depending on what's happening in the market at the time. Now, a key detail about Innovative Eyewear is that they are what's called an emerging growth company. This means they get to follow some lighter rules when it comes to reporting to the government. They can show fewer years of financial information, and they don't have to meet some of the stricter auditing requirements that bigger companies do. This can sometimes make it a little harder to get a full picture of their financial health compared to more established companies. Let's dig into what this company actually does. Innovative Eyewear develops and sells what they call smart eyeglasses and sunglasses. The idea is to let you listen to music, take calls, and even use voice assistants like ChatGPT, all hands-free from your glasses. They started in Florida in 2019 and have been working to make their smart glasses look and feel like regular designer eyewear, but with added tech. Their main product line is called Lucid Light, which came out in 2021. They offer different styles and have been updating the technology. They also have partnerships with brands like Nautica, Eddie Bauer, and Reebok to create co-branded smart eyewear collections. This shows they're trying to reach different types of customers, from fashion-focused people to athletes. They've also put a lot of effort into their software, launching an app that connects to their glasses. This app lets users interact with advanced AI like ChatGPT right through their eyewear. They've seen this as a big opportunity, not just for selling glasses, but for creating a recurring revenue stream through app subscriptions. They even have a feature called Walkie for team communication on the glasses, which is pretty interesting for certain industries. The company sees a huge opportunity in the smart eyewear market. They point out that many people already wear glasses, so converting them to smart glasses is a natural step. They mentioned that the global smart glass market was about $1.9 billion in 2024 and is expected to grow really fast, around 27% each year until 2030. They believe that combining eyewear with hearable technology and digital assistants creates a whole new way for people to interact with their digital lives. The idea is to get rid of the need to constantly pull out your phone. Their strategy seems to be focused on making smart glasses that are attractive, comfortable, lightweight, and priced similarly to regular designer glasses. They're also big on user friendliness and making sure the battery lasts all day. They're not trying to pack every single tech feature into the glasses, but rather use software to add functionality. An interesting note is their production process. They design in Miami but manufacture in China. This is a common practice in the electronics and apparel industries to manage costs. They sell through online channels like bestbuy.com and Amazon, and also through over 300 physical, optical, and sporting goods retailers. The smart eyewear space is definitely getting crowded. Innovative Eyewear acknowledges that they face competition from companies with much bigger budgets for research, development, and marketing. They believe their products are good right now, but they're aware that competitors could create even better products or compete more aggressively. They highlight a few key strengths. One is a unique solution to safety, arguing that their Open-ear audio design allows users to stay more aware of their surroundings, which is important for people walking or driving. They also emphasize their affordable price point, stating their Lucid Light glasses start around $149, much lower than some competitors that start at $249, Oz lowers with over 10 Welliars, much lower than some competitors that start at $249 or more, especially once you add prescription lenses. They also talk about quality, customizable options with over 10 Vine and 8 much lower AMs, some competitors that start at $249 or was lower, $149, much lower than some competitors that start at $249 or more, especially once you add prescription lenses. They also talk about quality, customizable options with over 100 lens types, comfort with a lightweight and impressive battery life of 12 hours. They also mention a capital light business model. This means they're not investing heavily in their own factories or retail stores. Instead, they partner with existing companies for manufacturing and sales, which can be a more efficient way to grow, especially for a smaller company. Let's look at the numbers in the offering section. As of July 2025, they had about 4.5 million shares of common stock outstanding, and they are registering over 2.3 million shares to be sold by existing shareholders. This is a significant number of shares potentially hitting the market. Again, their stock is listed on Nasdaq. This means there's a public market for their shares, which is crucial for this kind of resale offering. This section gives us a peek at who these selling shareholders are. There's Intracoastal Capital LLC, which is planning to sell a large number of shares. It appears their managers, Mitchell P. Copen and Daniel B. Asher, share control and investment decisions. Then there's Hudson Bay Master Fund Limited. It seems Hudson Bay Capital Management LP manages their investments, and Sander Gerber, as a managing member, also has a role. Several other individuals are also listed, like Craig Schwabe, Charles Worthman, Michael Vazenkevich, and Noam Rubinstein. These individuals are noted as being affiliated with H.C. Wainwright & Co. LLC, which is a broker-dealer. This suggests these individuals might have received shares or warrants for services related to the company's financing activities. This part details how the selling shareholders can actually sell these shares. They can sell them directly to buyers or through a network of underwriters, brokers, or agents. The key takeaway is that the company itself gets no money from these sales. Looking at recent sales of unregistered securities, the company has been busy. Back in April 2023, they did a deal where a shareholder exercised existing warrants and in return the company issued new warrants. This is a common tactic to encourage early warrant exercises, often involving fees to financial advisors. In April 2024, they raised about $1 million through a registered direct offering, selling shares and warrants. They also issued warrants to H.C. Wainwright & Co. LLC. Then in May 2024, they raised about $2.5 million in a similar registered direct offering, again selling shares and warrants and issuing more to H.C. Wainwright. More recently, in June 2025, they induced the exercise of Series H warrants. Shareholders exercised them at a reduced price of $2 cents, and in return, the company issued new, larger warrants called Series I warrants for over 2.2 million shares. This is a lot of warrant activity, and it's clear they've been using these to raise funds and manage their outstanding warrants. The exhibits list shows all the legal documents that back up this filing. It includes the company's articles of incorporation and bylaws, various forms of warrants that have been issued, and consent letters from their lawyers and accountants. This section is pretty standard for SEC filings. The company undertakes to file updates to their registration statement if new information becomes important, or if they want to stop offering shares. It's mainly about keeping their disclosures current. Alright, let's break down what all of this means for Innovative Eyewear. They're clearly in a dynamic and growing market with their smart glasses, and their strategy of partnering with established brands and focusing on user experience and affordability seems sound. The multiple warrant issuances and exercises suggest they've been actively managing their capital structure and potentially raising funds through these mechanisms. However, the fact that they are an emerging growth company and the sheer volume of shares being offered by existing shareholders does raise a few points to consider. The selling shareholders, including entities like Intracoastal Capital and those linked to H.C. Wainwright, are likely looking to monetize their investment, which could put downward pressure on the stock price if there's a lot of selling all at once. Their competitive strengths, like the affordable price point and focus on safety through open-ear audio, are good selling points, but they are in a market with big players, and staying ahead will require continuous innovation and effective marketing. The reliance on manufacturing in China also means they're exposed to supply chain risks and trade policy changes. We've seen a lot of warrant activity, which is often a sign of a company trying to raise capital efficiently, but it also means potential dilution for existing shareholders when those warrants are exercised. The frequent issuance of new warrants points to a company that's actively seeking funding, which is common for growth companies but also signals a possible need for ongoing capital. In essence, Innovative Eyewear is a company with a forward-thinking product in a hot market, but they are also navigating the typical challenges of a growth stage tech company, including managing investor expectations and dealing with competitive pressures. Their ability to convert their technological advantages and brand partnerships into sustained profitability and market share will be key. What's your take on Innovative Eyewear's strategy and these offering numbers? Do you think their smart glasses will truly change how we interact with technology, or is this just another gadget trying to find its footing? Let us know your thoughts in the comments below. If you found this deep dive helpful, please give this video a thumbs up and make sure to subscribe to Corporate Decoder for more insights. And don't forget to join our Discord community for more in-depth discussions and analysis. The link is in the description. Thanks for tuning in, and we'll see you in the next one.